Good afternoon, once more, ladies and gentlemen. I'm going to be using a simple concept here called the candle range theory to elaborate to us how we were able to trade this week, catching whatever about 190 pips plus on this particular pair, Cadjpy. We have other pairs that we traded as well, but I'm going to be doing a breakdown for this one on this particular video. So if you're someone that is struggling with understanding the candle range theory, you want to make sure that you follow this video practically as we do the breakdown. I'm going to be breaking down this concept from the higher time frame, bringing it down to the lower time frame. So currently on Cadjpy, this is the weekly time frame. And as we can see here, the first thing we want to start by spotting is our candle range low and our candle range high. So here on this market here is a candle range low. Now, the market is clearly in an uptrend, as we can see, moving from higher lows and higher highs. Okay, so we know that we are plummeting higher. So currently, as we can see, this is the highest point that the market has traded, and we had this point as our low that we were interested in. When this market sold down to this particular level, which this is a whole demand level, it bought back and closed inside this range. This is why we identify this candle as what our CRT candle range low. So we're going to map that out as what as our candle range low. Okay, the next target now is identifying the next candle, which should be what? Which should be our candle range high. Okay, so we look at the high of that candle, all right, and we name it what? We name it our candle range high. Now, after identifying this candle, the next thing we needed to do is to go down to the daily time frame and see exactly how the market reacted around that level. So on the daily time frame, we can clearly see that we have what? We have a daily time frame, rate, another CRT. So you take the CRT concept from the higher time frame and you break it down lower. All right. So we come down lower again here on the daily time frame. Now, this is a key level of this particular candle range on the daily time frame. When the market got to this key level, what did it do now on the daily time frame to give us a signal that we are going to be going higher? What we now saw happen is the daily candle taking out the low, the liquidity available below this low, taking out the liquidity available on our candle range high, then trading higher and closing above. When we saw the market trading higher and closing above, that was already a clear indication and a clear signal that the market is basically going to plummet higher into or give us higher prices. Okay, so what we needed to see to get that extra confirmation that this market is going to buy higher is when we see the market breaking above this level. When we see the market breaking above this level, then we can now go on the lower time frame, look for any 4-hour candle that gave us a fair value gap inside this range and look to take our buys from. So we shift down to the 4-hour time frame. Clearly, as you can see on the 4-hour time frame, this at this level is when the market pushed and then broke through that level. Okay, so this whole zone now we are looking for what? A fair value gap that we can buy from. The first fair value gap we can easily spot is this one that is lying beautifully below here. All right, and then the second fair value gap that we can easily see is this one that is also sitting beautifully here. All right, though it's a very small one. All right, so now we see that after the 4-hour candle pushed above this zone, and of course, it was giving us a clear retracement inside this fair value gap. Now, what gave us that confirmation that, oh, this short-term downtrend here has come to an end and we should be looking for higher prices is when we now had what? We now had a new H4 candle after tapping inside this fair value gap. Okay, it now did what? It now closed with a liquidity rate below this candle. When this closed with the liquidity rate, all the other preceding candles failed to break lower, close with the liquidity rate. Our goal now was to map the high of the candle that raided this liquidity, okay? And this here was the high of the candle that was responsible for clearing that liquidity at this particular POI. Now, we are waiting now for the next candle to break above this one. The same thing we're expecting when we came down to the daily time frame is the same thing we are looking for right now as we are currently sitting on the 4-hour time frame. So when we saw this H4 candle closing above this level, on the 4-hour time frame, we basically needed to do what? To switch now to the 1-hour time frame to look to pick up an entry. Okay, so we now go to the 1-hour time frame. Now on the 1-hour time frame, we can clearly see that this is a liquidity rate here. This is a liquidity rate here, and this is what we will now call our change of character. All right, seeing that as a clear change of character now, we are basically identifying the order block or the demand zone that is responsible for the change of character. And as we can clearly see, this is the order block here that is responsible for that change of character. So we switch against the lower time frame, like the 15-minute time frame, to see if we can pick up, that sniper entry. And of course, we get one when we refined this market from this whole order block region. We pick out the 50% of that OB. We have a good fair value gap sitting inside here, and also a 15-minute order block. So what did we do? We now look for what our buy entries from here. Okay, and then we are targeting higher prices. So the target here now is what? Is that candle range high that we spotted from the weekly time frame. That is generally the target for this particular buy run. Okay, this is the target. So currently it has not yet gotten there, but we know for sure it's going to get there. But wherever as it stands now, the market has already given us what? It has already given us 1:17 on this trade. So this trade was taken on Tuesday, and the market has traded up until Friday, where it currently ended. That over 186 pips on this one. And we know, of course, that it's going to reach here based on how we have the market moving. So that's basically how we're able to break down these charts from the higher time frame coming down to the lower time frame, giving in the key concepts and what we looked out for before we were able to take this trade. If you found this trade valuable, make sure to click the like button and share this video to one or two persons that it might help them. Add it to your favorite, and let's learn together. Until then, I'm going to be seeing you on our next video. Bye bye for now. Bye bye for now.